Appreciate it, folks. So with that, my name is David Mott. For those of you that don't know, I'm an advisor here, head up the advanced planning section of the firm, and also sit on the investment committee. Seem to be a mouthpiece recently. A lot of seminars for those of you that attend, and these little updates. So for my clients, you hear my voice well. Those of you that don't know me, though, I owe you an introduction. I want to lead off with any concerns you have about what's going on in the world. Don't hesitate to call your advisor. We're accessible to you. Call, text, email, right? Don't stew, don't brew, just reach out. Uh, we thought it would be a good idea, now that we're a little more lean and mean, to give you an idea of what we are thinking on the investment committee and our take on what's going on globally. Uh, for those of you that don't know, a quick recap: the United States and Israel have recently carried out some military strikes on the country of Iran. The IRGC senior leadership has largely been decimated. Key figures, including the Ayatollah, are now marked deceased. And this marks a significant escalation in Middle East tensions. What I want to start off with saying, what happens with the markets? I want you to think sharp, scary, temporary. A sharp reaction, some scary fears, but it is very much temporary, very temporary. These strikes that are going on are a little different than what we experienced with Iran in the summer of 2025. There's a very key difference. Those were Israeli-led, U.S. supported strikes. This is very much a U.S. engagement. In addition, Iran over the weekend responded with a number of rocket, drone, and missile strikes all across the region, not only attacking or retaliating against U.S. bases, its allies, but also a number of civilian, economic, and legacy targets. This has led much of the world to side with the U.S. Iran, in that retaliation, has lost a number of allies. What we are watching are a couple of items. One, the potential for broader regional conflict that could affect markets. We want to watch oil. That is a very big deal. We want to watch China and Russia's response to it. And then I want to go over a little bit of data. It's important to look at the facts. Immediate market reactions, say what you will. Not sure the stock market was the reason this attack occurred on Friday, but what it has done is it's given the US stock market and the global stock market about 48 hours to digest the news. No hard knee-jerk reaction, because we have had closed markets and 48 hours to digest. Markets opened up about half a point to 1% lower, now largely flat. There are some gainers in this market: Northrop Grumman, those defense stocks, Shield, Lockheed's having a pretty good day. International is pulling back quite a bit. This fear with what's going on overseas in the Middle East did shoot the US dollar slightly higher, as well as gold. Now, if we take a look at kind of those big points, oil. This is the one thing we're watching very closely that could have some very significant, I would call them significant, ramifications in the markets. There's the Strait of Hormuz, and it's a pretty big deal when it comes to oil. Crude is up from 60 something a barrel last week to about stabled off at about $70. That is a very good thing. It was surging up to 13%. Much of that has to deal with the Strait. Unfortunately, or I should say fortunately, there's a significant amount of oil that crosses through there. Upon the attacks, Maersk was rerouting a number of takers. Maersk is a large shipping giant, away in alternate routes. We need to see if this is going to be prolonged. That could drive energy costs higher, not just what you feel at the pump, but also the global energy sector. 20 million barrels a day go through the Strait of Hormuz, about 20% of the global economy. We need to keep an eye on that. If it does get shut down indefinitely, right now it is not. Big shipping containers are simply rerouting. If that does get entirely shut down and blockaded, we could be looking in the area of $90 to $100 a barrel, and that's when the market starts to have less fun. That is something we're keeping a very close eye on. Will the Strait get shut down? And if so, how long? So the stabilization of oil is a very big deal when it comes to this. That's probably the point that we are watching the most closely. Now, the good news is crude has stabled off at about $70 a barrel. And that is very good, which is where the market slightly started turning up, something we are still going to monitor. One question I was getting frequently over the weekend is what is a China-Russia response? Right now, it's looking okay. Feels like a bit of finger wagging, nothing more. The point of contention for these strikes has been the removal of nuclear capabilities in Iran. That's been the deal breaker. And this move has largely been mailed in. Those of you watching the news as I have, it feels like Marco Rubio has said every day for the last week, nuclear is a deal breaker. Talks are breaking down. Nuclear is a deal breaker. Talks are breaking down. So with that, this was somewhat expected, or I shouldn't say expected, but not really a surprise. China and Russia have been very open that they have a problem with nuclear proliferation. And Iran seeking nuclear capabilities, even though they are not even going to say allies, but more so partners globally. This is a point that they really weren't wanting Iran to achieve. So with that, the Russia-China connection seems to be finger wagging, nothing more than that. The other thing we are watching is the length of this conflict. While large senior swaths of the IRGC command has been eliminated, Iran has had secession plans in place. Orders continue to be given, missiles continue to be launched. Many of the middle commanders, if you will, middle management, have been giving marching orders for months. If you do not hear from senior leadership, continue to XYZ. That will create this conflict going on, according to President Trump, weeks, weeks. Hopefully not that long. We do not know. But if this draws out into extended conflict, that could be a bit of strain on the market and uncertainty. This is bleeding into other areas of the Middle East. Many of you might recall Israel and Hamas having a bit of a very loose ceasefire. That's now off the table, and that conflict is going a little more hot and heavy. So with that, there's usually a sharp movement, which we somewhat experienced this morning, albeit 48 hours calmed down because the markets were closed. It feels a little scary, but they are very, very temporary. What we're really looking for is that stabilization with crude oil prices. And it's not so much an issue other than if the Strait of Hormuz is completely shut down. And I know I'm probably pronouncing it wrong. I know I probably said it 3 times in this discussion. Feel free to text me and correct me. But we really want to watch the stabilization of oil. I'm a data guy. I want to go to the data. If we look at the last few conflicts going back to the 90s, a few big ones, we had the Gulf War, we had the Afghanistan War, Iraq in 2003, and then we'll count this Israeli US supported Iranian strike in 2005. If we take a look at where the market was the day of those strikes and where it was 21 days later, it averages 6% up. That's that stabilization we're talking about. And if oil stabilizes, right now the logic is that we could see the same type of stabilization. If we look at the markets where they were 63 days after those previous conflicts, 30 years worth of conflicts in the Middle East, markets are up nearly 10%. The data would suggest recently that there is always a sharp spike, stabilization, uncertainty gets removed, and the market continues to focus on things like earnings, continues to focus on things like growth, GDP, and the things we're used to watching. So with that, the investment committee is absolutely not panicking over this. We do not panic. We follow our strategy. You folks know that. But if there is something that we are watching, it's the stabilization of oil. And within half a day today, we're already starting to see that. Oil had spiked about 13-15%, has moved down nicely to about $30 a barrel. If that holds, we should be in a great spot. I know I've thrown a lot your way. You feel like you get a seat on the investment committee. Apologies for the delay. The hardest part of this discussion was finding a few minutes on my calendar today to do that. But we think it's important for you to see our faces and hear it directly, what we are watching. Ultimately, though, not concerned. Not concerned, not only because of the historical points, but all the data points we are looking at are stabilizing. Again, there can always be a black swan event, but data suggests that we should be in great shape. Goldilocks area when it comes to our algorithmic trigger. We have enough room to weather this storm, so we're not very, very code red close to our trigger. So we're in a good spot. Your money is protected if things do escalate in an area that we don't like, but right now this feels very short term based on the data we are looking at. So with that, if you'd like a further deeper dive, when it comes to regime change and the effects in the market, a prolonged conflict, or where oil is moving, by all means, call your advisor. More than happy to have this discussion in a much more detailed area. But with this, we're leaner, we're meaner. We wanted to make sure that when these events go on, we want to load up the camera and let you know exactly what we're thinking. So, folks, appreciate you carving out a little bit of time. Another talking head has been delivered, but now you hear it straight from us. And if anybody needs anything, by all means, contact myself or your advisor, and have a great day.